Okay, good afternoon, everyone. I'm Chavan, the host, and along with me, the strategist at Indiacharts, Rohit Srivastava. Rohit, very good afternoon. Is the Teji which is supposed to happen is not happening. Absolutely sideways, boring markets. What is your take?
Yeah, I think sentiment has been so hurt that people are still not coming to terms with the idea that maybe the
Hmm.
worst is already over,
Hmm.
and then that thinking has a feedback loop, and that feedback loop comes to me, and then I am also forced to think whether I am right or wrong in trying to be overly bullish now that all the events that were supposed to be bad are already behind us. But having said that, if sentiments are still so poor, they can only get better. And seasonally, the month of May does tend to be a downer.
Hmm.
It has a long history of seeing major sell-offs. But if it doesn't see a major sell-off, you do sometimes get a correction, consolidation during this month, after which things start to pick up again. So, from just that point of view, it's not surprising. Today is expiry day, and markets are just remaining tight, I think, to allow for the monthly expiration to close.
Hmm.
That's my sense.
Okay, but if you look at the charts, Bank Nifty especially, it looks like a perfect triangle about to shoot off. And a lot of data points which are actually, showing that okay, the Teji is about to start. You look at RRG or you look at, PCR data. Let's discuss more. But overall, you see the sentiment very bullish right now. I mean, not the sentiment, the markets.
I think the setup is there. So it's like we are sitting here, okay, and
Hmm.
we are sitting right above these key supports that we have come to, and we are bouncing on top of them every day. Every few days, it's like okay, we can move, and then we come back, and then we don't move, and then okay, we can move, and then we come back, and we don't move. And this is it's like crawling on top of the support, and
Hmm.
therefore people can argue that this is a distribution. A lot of people are messaging me on Twitter saying distribution hai ho gaya abhi. And I'm like, yeah, but it's not broken down, and what if it breaks out to the upside? And as you just mentioned, the most convincing chart here is actually that of Bank Nifty. Like, it is very
Hmm.
clear, and I was coming to a similar conclusion that maybe
It's a
we are looking at a triangle, which is typically seen in fourth waves complex patterns.
correct.
And if I just go by Bank Nifty, uh, and if this triangle is true and it does break out above 55,900, you
Hmm.
could actually see a very explosive rally in the Bank Nifty and broadly in the financial sector, which is where a lot of the new money or the cash that the funds had on their books has actually gone since January. Okay, so we put it in that perspective, and also add to it that this has become over time one of the most undervalued sectors. So that's a combination, to have really nice combination to have for something to fly.
Hmm. Now that we have strike, Rohit, let's talk about data points, which are actually telling that okay, it's like, you know, about to fly. If you can just open the PCR data first thing, you know, uh,
So this is very short term. So when we are looking at the Nifty PCR, this is a live chart. Okay,
mm,
people can find it under options Nifty. So it automatically opens with Nifty. There are others you can look at. And when you look at the Nifty PCR chart here, I've removed the volume. I'm only looking at open interest PCR. That has come here to 0.69 or zero point 0.7 right now. Okay,
mm,
I've put the two horizontal lines just to give people a sense that this is the broad range in which it has been moving. Okay, otherwise, if you look at the raw data without these lines, you may not get a sense of what it is. And
mm,
during a bullish phase, whenever you reach the bottom end, so just to give perspective, I'll take it back a little bit. If you see this point where it got to zero point 0.7, that's where markets went up quite a bit. And even back here after the election. So this is whenever markets dip and they reach this point, you sort of seen a recovery. Okay, during a bullish phase. So I am considering this a bullish phase. And in that sense, so even from here, when you had the Trump trade, and now here, where it had fallen a bit, it recovered after 2 days, and now we are back at this level again in terms of reading. Even though the Nifty is slightly higher from year to year, you're back at this oversold reading. So I think we're just set up here, and today's expiry and this reading means that we are just waiting for all the options to become worthless. Now, why do I say that? People should understand that a low PCR simply means more calls than puts. Now, how do we look up at whether there are more calls than puts? One way to do it is in the derivative data, we have something known as call minus put histogram. This shows the total open interest of calls minus the total open interest of puts. So if it's a green bar, it simply means there are more calls than puts, and therefore the PCR is usually down. Okay, now what we were looking at was the live data. This as a sentiment indicator is 1 day behind data, so this is as of yesterday. But if the PCR has fallen to 0.69 today, that means as of today, this data might even shoot above the red line. I'm just guessing, okay. And if it touches the red line, typically we have seen the market, bottom out over there in the near term, like over here, or it's here, or even if you go back during a more bullish phase, like here on election day, or here, same point where you are seeing the low PCR, you see a huge call, open interest, where that is a point of maximum pessimism, where people are selling too many calls. And sometimes it does happen on expiry day, because expiry day people are doing 1 day trades, ek din ka sauda, and usme they expect a lot of volatility, the writers sell, and ye sab nonsense is going on basically. So that nonsense comes to an end today with expiry, and then normal markets start tomorrow. And that fits with also something known as seasonality. Okay, so if you simply go to Nifty seasonality, this is again another nice chart. What people should note is that this tends to move all over the place. So here it was in Feb, when we had the worst month, and then it bounced back, right? In March we had a very good month, and April was beautiful, and then suddenly you get a dip in May. So this is exactly what we are witnessing right now. Now, it may show you that you also see a dip here in June, and then you see a dip in July, but it doesn't necessarily follow this pattern. What I've seen is that if May is bad, you usually start improving from June. Okay, and if May is less bad, then June can be bad, or there's slight variation between the two, which you can see from the grid. So if you look at any bad month, like say here May is negative, then you see that June is positive. Here May is very negative, June is quite positive. So there can be that inversion. Here also May is negative, June is positive. Now here it's not negative, but it's smaller than the last month. Okay, so it's been flat, like at least the last 2 weeks we are witnessing a very, very flat market.
Yeah.
Therefore, I think things actually will pick up into June and then further into July, and only cool off later in August or September. So that is the typical cycle that we should be expecting to play out.
Okay. And anything with the sentiment? Any other data points?
So on sentiment, among other data points, interesting thing is the client open interest. This has gone back to the long side. So just before the war, this is where they were excessively long. Typically, just for people's understanding, when they are very long, markets tend to bottom out, at this phase or this phase, or even if we go really back when they're long like this, these are all bottoms. On the other side, shorts can be near the top. So there were some built up in shorts over here, and these shorts were here around the war. So I guess they were related to the war. So as the war thing was going on, there was a short built up. Okay, but the moment that has ended, we have gone back to long.
Yeah.
Okay, quickly we've added back longs as the market is going side. So during this entire sideways period, we're seeing the longs add up, and we'll know the actual number for next month only tomorrow. So after expiry, you'll come to know whether in the next month they are along by more or less from where they were today. That we don't know today, because this is a combined number. We don't get the breakup. So tonight's number after expiry will be even more interesting in terms of, if this becomes even more long, then I will say it's a very bullish sign, where the client side is actually showing confidence on a further move.
So we are just waiting for things to start, but yeah, patience is the key here. It's really testing the patience. Yeah.
You see today's market, what is happening around the world versus ours? Okay, we
Mm,
have the nonsense, which is the Trump trade. Once again, they are like, oh, this is illegal. I don't know if it is legal or illegal. They'll surely find some loophole, and if they don't, they can even pass a 10% VAT in the budget. But on the back of that, US futures are up by almost 1.5%. Okay,
mm,
but our markets are like dull. Our markets are not reacted even to the 1.5% jump that we saw on Monday on some other related news which was US and Europe having coming to some agreement. So all that is causing upside in US markets, but our markets are still really behaving in a very dull way. So I have just reasoned that it's seasonality and it's these option guys, सबने लॉन्ग कर लिया कॉल, सबने कॉल बेच दिया, राइटर ने बेच दिया और सबका माला जीरो हो जाएगा. This is the only way I can say, and then from tomorrow you'll see the reality.
yeah, absolutely. But which sectors now? Talking about sectors, which sectors you are looking at? I know banks. One is banks. You know,
The second
anything else?
is use, the third is metals. In that order, I've been continuously saying these in all my media interactions, so I'm just repeating them here. Uh, and all three come under value because they are not expensive sectors. Unlike chasing something that has growth and valuations being high, a lot of the valuations have come off, even in financials. When valuations have come off a lot in metals, they're sort of flattish. They never went up too much, but they've evened out with earnings growing. And
Mm,
PSUs have seen a very deep correction from the extreme they had reached in June of last year. So that has brought the valuation down. So sort of all these sectors are in a very good spot, to get back driving things higher from here. So I think these are the sectors I am focused on. But that doesn't mean other things won't do well. If you have a liquidity and interest rate cycle, surely autos, realty, and all that can do well. But each one's choice as to where they want to focus.
okay. And one thing what was concerning last week was the bond markets. Last time you had told if it hits five, you know it's a major concern. It hit five, but it has cooled off. Do you think further it's going to come down, the bond markets?
So while that's a
us
hanging sword, what I've ended up doing, I've told myself that if I keep focusing on that hanging sword, I'll never be able to invest. So
Hmm.
therefore, I have thrown it out of the window. बाहर ही फेंक दिया. नहीं देखने
Nice.
का है.
नहीं
Because
देखना
वो करेगा क्या? See, we know the end result. It's just a short-term blip. It's just like the Trump trade. मालूम है ना? We knew even before the Trump trade. I had my mind planned. We wrote a long short report called "Don't Blink." I said, "See, Trump आएगा, करेगा, and then they will negotiate." What we didn't know is I was anticipating 20% लगाएगा. Oh, 100 or 200 and all that when he started. The markets panicked. That's about all that happened. Now the same thing is with the bond market. What do you know will happen? हाँ मालूम है Fed तो खरीदने वाला है bond. US मरने थोड़ी वाला है. They're not going to default. So they're not going to default. What is the answer? They're going to buy the bonds. So then what are you panicking about? Just the timing of it all. कि आज खरीदेगा कि कल? Or they want to create a crisis so that they can, create a case for buying them. So that is the only reason they can create a crisis is market girega. You will say, see, things are bad. We need to buy the bonds. That is the only thing you can want to do. And then again, that also might not happen for all. They'll just cut interest rates because inflation fell. Oil prices have been down for so long. Eventually, inflation is going to catch up on the downside. There are a lot of people who are saying inflation niche nahi aayega, but that's the only reason is, oh, the tariffs will cause some bump up in inflation data. Apart from that, so it's a fight. I mean, this argument around inflation just goes on and on. But in the interim, other countries that are not affected by it, okay, उनका inflation तो कम हो ही रहा है, whether it's India, whether it's Europe, and so we are already cutting interest rates. So the direction is very clear. Rates are going to go down, whether it's in US, India, Europe. It's only a question of who moves first. Are we going to move first? Are they going to move first?
Yeah.
Okay. Eventually, if you have a lot of liquidity, and we also have domestic liquidity coming into the SIPs and everything into mutual funds, that
Hmm.
is to get deployed at some point of time, and that itself will just drive the market to another level. So There's so many angles to this, and so you cannot time it all perfectly. You can time it with sentiment indicators. So every time, so simple answer is this: every time sentiment indicators on strike get oversold, you have a good condition to buy. It has worked. Even on Trump day, the swing was 3, and if you bought it, it would have worked. So all of these things have worked. It's just key how much guts you have. It's me versus you. Even I might not have it, but can you? The indicator is there. बोल रहा है आपको ले आप ले सकते हो. आपकी हिम्मत है कि नहीं? हिम्मत की कीमत है. Simple.
Be brave and yeah, तेजी
Be
होएगा.
brave. That used to be my tagline of my similar reports that I used to write at Sherkan. The bottom line used to be brave, be a brave heart.
The brave heart reports. Yeah. All right.
So if you
Yeah.
can't be brave, then what?
Hmm. So good, Rohit. Yeah, the way you are explaining it, it seems like you're very confident of this getting into a bullish markets, and of
So
course, Nifty.
let me take it in a different angle since you asked sector. So I'm going to share something again. Okay. Biggest concern last year, including mine, mid-cap stocks. Okay, will they grow, not grow, what will happen? This is the EPS cycle of the mid-cap stocks. You can very clearly see they were growing after 2020 from COVID all the way here to 21, 22, 23. And then there's a drop-off. This is why we got the sharp correction in mid-caps last year. Now what is happening? The earnings of mid-cap stocks this quarter is back to over 20%, 25% versus large caps at 8%. So they are proving the large caps wrong. As much as people want to say large cap kharido or mid cap chhodo, the earning cycle is proving it wrong so far. So then I go and look at the next factor. Then I go and look at, I'm sorry, I'll just show you. Can you see my chart?
Yeah.
So this is the ratio of Nifty mid cap to large cap. It sort of shows you the performance cycles. Performance meaning this is when mid caps are outperforming large cap. This is during the last major bull market up to 2005. Then there was an underperformance period, but the bull market didn't end. And last stage, again it outperformed. And then it went into a down cycle. So there's been these up cycles, down cycles again and again. This one is till 2018. After that, it went down, even though Nifty did not crash, but mid cap stopped performing. So when we reached this point, I also started getting worried here, and we started to say that mid caps bahut ho gaya. And we got a correction. But after this correction, when we are looking at this chart, what I'm seeing is you aren't really seeing a big collapse. Either you'll get a period like this where you'll get underperformance, but certain stocks will do well. But in the near term, you're actually seeing the ratio move up quite smartly. It's beginning to look like mid caps are actually slowly outperforming large caps again. So then it takes me to one more scenario, and which I almost don't know when to consider or not, but it can be highlighted. And that is this. See, before it came to this channel, there was a long trending phase, very sharp trending phase where it did very well. I can put this also inside a channel, something like what we have done here. Okay. So now if it is picking up here, for all you know, why can't we see a continuation of this? Channel part is over. We may just break out and get out of this zone. And that means the mid-cap cycle goes on longer. So this is just, I'm just throwing ideas. I mean, see, we should always be willing to change our idea if something is changing. So from thinking that they will underperform, for all you know, they continue to perform.
If it breaks the channel, Rohit, we are in for a huge rally.
Yeah.
Mid caps will,
Continue to go. Yeah.
Yes, absolutely. Important to break out from this channel now. Right. Okay, fine. Thanks, Rohit. Let's take up the questions. Those who are here, please do comment, post your questions. Okay, can you share your Elliott wave counts, Rohit, on the Nifty? It is a fourth wave, very clear. Bank Nifty, so it is clear fourth.
No, on Nifty, it's not a fourth. So let me, I'll have to share it again.
In the meanwhile, please do
So what?
put up questions. Yep.
So what we've tried to do is we've tried to end a complex corrective structure from here to here. We've called this W, X, Y, X, and Z. And we are sort of considering that it's over. In fact, the lows are also I found along a trend line, like something like this, almost along this line. So we didn't
Okay.
actually break this, and we sort of done Z. So from there, we are trying to count it as an impulse, and I'm taking it something like this, some kind of a 1 2 1 2, waiting for a 3 of 3 to happen. This also has a triangular look, so I do have an alternate count. I don't want to take it as a triangle, but it can be a running correction of some kind also, instead of 1 to 2 times. That's the second part, because some people might argue, and not a wrong, it's not a wrong argument, that this is a series of 3 3 3. On the hourly, this also looks like 3 and 3. So if you have a series of threes, it's possible it's W X Y X Z, and it's possible it's triangular. Now, if I take this as triangular in Nifty itself, it becomes a fourth wave and fifth, but this is too small, so I don't want to go into that direction. So I'm saying this is just a thought, okay? But I can take this as one, and then whole thing as two, as a complex pattern as well. But in Bank Nifty, we have greater clarity, okay? That this zone is sort of like a triangle. You actually can do an ABCD over here. Okay, so A, B, C, D, E, something like this. Okay, this is one way. You can say it's W, X, and then Y may triangle also. Some people may even try to, you may say that this whole thing is like this, a triangle. Okay, there are different ways to think about it. But this last part is more clear. So I go to an hourly chart, and we sort of stuck inside this. And what I'm waiting for is to break out above this upper line, which is around what I mentioned, 55,900. Now it's almost near 56,000. Once you get past that, then we are looking at a fifth wave. Now, what does that really mean? I've drawn a channel over here. Sorry. And the channel goes to almost 60,000. I don't know if wave 1 and 3 are equal or third was extended. That's an interesting thought to have. It's slightly extended, so it's beyond equality. So if I say wave 5 is equal also, we only go to 58, 484, but I doubt it. I think after such a long triangle, typically you will see a move which is very strong. And if you have seen this kind of a throw under, you also get a throw over above the upper line. So I'll not even rule that out. So if we do break out on the upside of this, it will be something pretty violent.
Okay, fine. Thanks, Rohit. No, we don't have much. Okay. Any views on silver and gold?
Uh, See, they're interesting. For a while, I thought there would be a correction because you've had a big run. But after the recent correction, we are seeing an impulse again. Okay, so you got A, B, C. C may you have 5 waves down, and then you have 5 waves up. This 5 waves up is again a 1 and a 2. So that means that there is no correction in gold, basically. It's going to eventually break out, is what the pattern is reflecting. For silver, the good news is that maybe if gold remains positive, it can finally attempt this breakout, because it spent a very long period of time in a congestion zone, which I have now marked as a triangle. Okay, if people don't understand where I've marked it, I'll just show you. What I've marked is this: A, B, C, D, and E. There is a through under in E below the line, but this is one long duration triangle. Everything here looks corrective. Anybody who's looked at this period would have thought they are all corrective moves. But the failure to go below this range maintains the pattern, and after that now is where we are beginning to see the first impulse. So we've seen wave 1, wave 2, in the early stages of starting off into 3, and I think gold is sort of indicating the possibility that it might happen.
Okay, fine, Rohit. And those who are viewing here, go to start using strike. The data points is very critical, very important. As Rohit showed, you can just go to web.strike.money. You can sign up. You can start using the strike for a 1 week free trial, and then you can subscribe if you're interested. But do try it out. Rohit, any ending statements?
Ending statement is avoid being negative. I think the best of negativity is behind us. There is no war. There
Mm,
are no more major tariffs coming. Interest rates are going to go down,
mm,
and the bond market will eventually be saved by the Fed sooner or later. What can go wrong?
mm.
Please tell me in the comments.
Yeah, fantastic way to end. Thank you, Rohit. Once again, you know, go to Strike, start using it. Web.strike.money. Sign up right today.
And if you
And
want to understand how we do this analysis, especially Elliott wave counting, you can see the message at the bottom. We have
yeah,
our next batch starting somewhere into September month. If you're interested in the mentorship program, extensive learning program. It goes on for months. Then you become part of our community. You attend the annual workshops, continue to learn, stay on our group. It's a lifetime experience. So if you think that something like that is what you really want to get become part of with other
yeah.
like-minded people, then call this number and we'll help you through it.
Okay. Fantastic. So do call us right away. Inquire on the Indiacharts mentorship program. We are starting it very soon. With this, let's end up today's episode and see you next week. Till then, take care. Thanks, Rohit. Thanks for a wonderful session. Bye bye.